It's about that time of day again. My name is Joseph. Monday evening, February 26th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off tonight on oil, crude is bullish and trying to reach January's high, but a tiny, almost hidden resistance line appears to be standing in the way for all these bulls. So I'm going to sit tight and look for traps down in the battle zone for buying opportunities on Tuesday. Speaking of buying opportunities, look at the S&P tonight. S&P is bullish, and the aggressive nature of this move higher tells me to watch for buying opportunities using a hidden channel. Looks like we are on a short covering rally going into the end of the session. I got a big plan for tomorrow. I'm going to grab a look at that in a moment on the S&P. Nasdaq also bullish, but only a few points from the measured move target. So I'm staying patient to buy a two-legged pullback. But if it keeps pushing higher, we get a big prior month target on the Nasdaq. So make sure you stay tuned here for more of that later on tonight on the video. Gold, the yellow metal, is bearish. Yeah, market going lower here. Equity is going higher. Metal's going lower. Gold is bearish and rotating back to the low of a big old megaphone pattern. That's right, inverted triangle, megaphone pattern on gold. Get a great plan, but I think a grind break on gold tonight is the most important clue to find the best selling opportunities for tomorrow. And wrapping up here tonight for tomorrow, euro is bearish, but trading sideways with a real narrow triangle. And that tells me to avoid the middle of that triangle, focus on those failures, and we're going to be using the 2-try rule on the euro tomorrow. Boy, we got some real strong trends on the E-minis. We got some ranges to work with on the gold and the euro. And oil, is oil going to retest January's high? We're going to find out in just a few moments. Before we jump in, though, and put the plan together for Tuesday's session, I do want to remind you, if you're on YouTube right now, make sure you subscribe to the YouTube channel while you're here. Hit the bell icon, right, and the same button for the subscription to make sure you get notified every time I post a new video. And I'm going to talk about a lot of topics tonight. If there's any questions about anything we cover tonight on the video, please don't forget, if you're on YouTube, to drop those questions in the comment section below and give me a thumbs up if you found value, because it'll help me, right? It'll help me get my channel on more radar screens here today. Also, if you're on the blog here at sidewaysmarkets.com, this is our trading blog. I'll put all the links in the description of the YouTube video. Head on over to the blog at Sideways Markets. Lots of reasons to get over here. First of all, our mailing list. In the upper left-hand corner, make sure you join our mailing list. I'll send you an email anytime something new happens here at School of Trade. And then also, don't forget, I know you guys like social media, so do I. I'm always posting important links, charts, and updates, stuff you won't find anywhere else on the interwebs, right? For those charts, links, and updates, follow me on social, lower left-hand corner. And speaking of charts, how easy is this? All the charts from tonight's video, you can have them on your computer ready for tomorrow, right where it says click here to download today's charts. You can't get those on YouTube. So again, if you're on YouTube right now, go into the description of the YouTube video, follow that link, right? Head over here to the blog at Sideways Markets and grab those charts for tomorrow. And speaking of tomorrow, what are you waiting for? Grab that free pass while you're here. While you're here on the blog at Sideways Markets, grab that free pass. Come out and join me as a guest in the trade room. We always have such a great time in our trade room. We've had a great month of February. I look forward to seeing you there tomorrow on that free pass as well. And again, as I mentioned earlier, you can post questions in the comment section on YouTube. You can also use the live support tool on the right-hand side of our website. And I look forward to answering all your questions. Going to grab charts here in just a few moments. Before we grab those charts, though, let's make sure we know what the schedule looks like for tomorrow. Tomorrow is Tuesday, February the 27th. Now, back when I was a kid, right, we always kind of learned that February, right, only 28 days in the month, right, unless, of course, the leap year. Do they still have leap years? They do, right, every 4 years or so, right? I guess this isn't a leap year, right? I always felt bad for the kids when I was growing up, right? Their birthday was on a leap year, right? They got totally shafted among other children. The bottom line, though, is I'm getting off topics here. February's a weird month, right? We're almost done with the month. of February, right? Right? Anybody out there's birthday on a leap year? Post me a comment in the section below. I can't say I've ever met anybody with their birthday on a leap year, February 29th. That must be a complete hassle. Let me know your experience in the comments section. The bottom line is not tomorrow, but Wednesday is the last day of the month. Now, what does that mean? Well, we talked about this a little bit last week. If you watched the newsletter last week, at the end of the week, right? We talk about the end of the week. We start watching last week's levels. Well, the end of the month. Yeah, same thing. We're going to start watching last month's levels as well. So again, it's not tomorrow, right? But Wednesday, right? Again, no leap year, right? I'll have to confirm that, but I don't believe it is, right? So according to this calendar, there's no leap year this year. I'm having some fun with you while I'm here today. But Wednesday the 28th, that is the last day of the month. So as we go into the end of the month, it's important to remember a couple things. First, volatility. Anytime we get close to the end of the day, the end of the week, or the end of the month, traders take bigger risk. Risk tolerance increases because either you're way up on the month or you're way down on the month, and traders they take their bigger risk takers towards the end of the month. At the same time, professional fund managers, account managers, and disciplined traders know that volatility increases, and they will typically shy away from trying to be, try to participate in that kind of gambling environment. So we have this kind of cocktail of lower volume and higher volatility that comes in the end of the month. Just be aware of that. And it's like clockwork. Once we can start seeing the end of the month this week, traders just start doing stupid things, right? And that creates big moves. Right now, we get some really big moves on the equity markets, and that could be a result, right, of this end of the month, right, coming around. Traders trying to bank some profit, right, towards the end of the month. The second thing you want to be aware of, right, end of the month, again, we said earlier, is those prior month open, high, low, and close levels. So keep that in mind for tomorrow. We're going to see a couple of them tonight on the charts. The most important levels are going to be that prior month high, prior month low, and prior month close. Those will be the three big levels you want to watch for. And we get a couple of them on the charts, which we'll talk about here in just a moment. So now that we have that out of the way, and I think there's a consensus, this is not a leap year, so Wednesday is the end of, right, the month. Now that we have that out of the way, right, we go into tomorrow's session. Really, there's no major news in the overnight. Right? Really no major news in the overnight Asian session. We come in tomorrow morning, get 5 a.m. Pretty much all the news tomorrow is really lumped into the beginning half of the day. We get the economic sentiment here from the ECB. We got durable goods at 8:30 and international trade at 8:30. That's pretty much the meat and potatoes tomorrow. Big news at 5, big news at 8:30. We got some CPI from Germany there tossed in at 8 o'clock. I don't expect that to be a major market moving event. As we move lower, we got some home prices. Home prices got crushed today. That 10 o'clock number this morning, home price is just getting crushed here right now with rates rising. But the bottom line, though, is we got some more home price numbers. We got that kind of mediocre consumer confidence number at 10 o'clock. Don't forget, I don't want to discount 10 o'clock news, but, 10 o'clock is always a really active time of the day. So, we call it a 10 o'clock shock in our trade room for a reason. That's about it. So we've got the end of the month on our radar right now, prior month levels, right, increased volatility. And tomorrow we got, again, 5 a.m., 8:30, 8:30. So, it's really get to it. That news event, those news events are early. So, most likely to see the big movement tomorrow morning early. And lately, we've seen these afternoon sessions really start to trend well. So, normally I encourage you guys to be focused on the mornings here because that's usually where you get the most reliability. But over the past few days, though, if you've been sticking around to trade the afternoon session, kind of once you get to that lunchtime break, 1:30, 2 o'clock Eastern time, we've seen some really great trends and some relatively reliable price action as traders kind of pile on towards the end of the day. So early morning opportunities, we'll watch and see if we get some late day opportunities tomorrow as well. And don't forget, as we go over the strategy here tonight on this newsletter, please don't forget, I'm going to be with all of my clients tomorrow morning at 8 o'clock Eastern time. I look forward to seeing you there, and we can trade the plan together, right? So you don't need to do this alone out there tomorrow. Come out and join us, a new client. We'll do it together in the trade room, and I'll make sure you're doing it the right way. Okay, so tonight we're going to go crude oil, S&P, Nasdaq, gold, and euro, right? We got some strong trends here right now in the first three charts. Crude's trending higher, S&P trending higher, Nasdaq trending higher, and really a lot of them have kind of the same basic principles. So there's going to be some overlap here on the next few charts, but you'll definitely, right, want to stay tuned here all the way to the end because we've got some great ranges to work with on the euro and the gold. Starting up tonight on the Texas T, the black gold, the crude oil, yeah, we're bullish with a spike in channel pattern. It appears the buyers are having trouble pushing through the midline resistance on the way up to the measured move. So my plan is pretty simple. I'm going to avoid trading into this midline resistance and look for more reliable buying opportunities down in the battle zone waiting below. If we do continue higher here, the measured move makes for an excellent target, right? But that will be major resistance, at which point my plan will be to buy a two-legged pullback and a retest of the high tomorrow. I wanted to give you guys kind of a bird's eye view of this chart tonight because it is relatively important. You can see the big picture here. First of all, big strong move up, pulls back, new highs, right? We'll use that to draw a hidden channel off of that low, and surprise, surprise, the pullback today went right to the low of that channel. If you've watched my newsletter more than a few times, you were waiting for that, right, early in the session today. So that was pretty easy there. The second thing, right, we got one leg, two legs, three legs. Ooh, that's four legs higher. Now, again, if you're a veteran newsletter watcher, right? I guess watcher is the best way to describe it. If you watch my newsletter consistently, you know that four legs higher. You know, it's not a guaranteed we're not going to collapse off of four legs higher, but usually four legs are just about as far as we end up going, and things start getting a little bit cuckoo right up there after four legs. So we get a four-legged measured move up there at 64, right, 43. That could really make things pretty ugly up there tomorrow, just because, again, we really haven't seen a huge correction, right, like the S&P had, right? We haven't seen that big correction to shake things up here, right? And you'll notice we haven't broken below any of these, right, these prior swings. So very, very strong trend on this oil. Speaking of strong trend, reversal lines, another big clue for the strength of this trend. You'll notice we're getting zero overlap right now, right? Price goes up, pulls back, goes up, pulls back, goes up, pulls back. It's like a video game, right? The thing is just behaving so well. Most of the time, markets, they'll do this, up, back, right? There's a ton of overlap, right? See what I mean by that, right? Lots of overlap, right? When the markets start doing this, boy, this is a very strong trend, right? You can see they're really, right? There's no overlap, right? Everything that pulls back goes higher, never goes, right? Never goes into that prior range, right? Never goes into that prior range, right? So that's a big clue of the overall strength, right, of this market. And then, can you see it up top there? Yeah, there's that prior month close. That's the big carrot at the end of the stick right now for all these buyers, right? They're trying to get back, right, to that prior month, right, that prior month level here. So that really reminds me, we look at a kind of a daily chart here, and here's just a quick glance here at a continuous contract daily chart. Don't worry too much about the analysis here, but worry most about the fact that we just came off this big drop, right? This big drop back down. That big drop down, how many sellers do you think got roped into that, right? How many people do you think saw that big? This of course is many. This is weeks ago, right? But how many sellers do you think are looking at this right now and going, shoot, I'm on the wrong side of this market, and they know that we're trying to go back and retest that high, right? That's that prior month, right? That's that prior month close, right? That's that prior month high, right? Waiting up there. So we've got a lot of sellers who I would assume right now are really, really worried about the condition of this market, and they're going to start getting out of those positions and throwing gasoline, right, on this fire going higher. We'll talk more about that in a moment on the S&P and the Nasdaq, because it looks like that's what they're kind of dealing with right now as well. So we got quite a bit going on. We got a four-legged move higher, a very, very strong trend here right now that is probably being fueled by a short covering rally. We talked about the short covering rally kind of personality last week on the newsletter, if you recall. Sorry, 2 weeks ago on the newsletter. You can search for short covering rally on my blog or my YouTube channel, and you'll find it there pretty easily. And again, we have some big carrots here waiting for us, right? That measured move, right, and that prior month close. So we know there's going to be a big objective up here, but we know that 4 legs higher here. We really got to be careful, right? Being a little bit too aggressive as we go higher. So now that we see the big picture, now let's kind of zoom in here a little bit closer here. That way we can kind of see what this chart looks like, and then we can kind of go from there, put this plan together here for tomorrow. So now that we have that, now let's zoom in a little bit closer here right now. And really the most important thing here is we get a strong move up, right? We know where we're trying to go, strong move up. And anytime I see a strong move higher, I always know what? Two-legged pullback, right? And a retest of the high. All right, so that's definitely on my radar right now, okay? And again, if you watch my newsletter, you've heard me say this time and time again, right? We see that strong move up, two-legged pullback, back to a level of support, right? And then look for that buy going higher. So that would be the ideal scenario for the oil buyers here tomorrow. Now, if price goes higher, obviously we got that measured move kind of hanging out here, staring us in the face right now. So if price does go higher here, I got to be careful being too aggressive up here, right? We got some resistance, and again, I know we're right 4 legs higher. So again, let's kind of play that game. What if price goes up? What if price goes down? Right? What if price goes sideways? If price pulls back here, I'm going to draw a trend line coming across the highs. That creates that support level. So you use that, right, as a support level down in that battle zone, coming off of that rising support, right? Would love to use all that good stuff, right, to be a buyer there for tomorrow. If we happen to go sideways, right? If, for some reason we come out tomorrow and we retested the high, we happen to go sideways here, no big deal. We're still bullish. Just don't buy high, right? Whenever we see a sideways range, we know to look for the 2-try rule. We're going to look at the 2-try rule a lot on the euro and the gold in a moment, so stay tuned for that, right? 1 try, 2 try, right? And then being a buyer as we go back up, right? So if we do end up going sideways tomorrow, it's definitely a bull bias. Keep looking for those buys below the low of that trading range. What if price goes higher here? Strong move up, pulls back just below the moving average. If we go higher here right now, I got to worry about that level of resistance. So what you want to be thinking is anytime I find myself in a position where the only option is to buy high or buy into resistance, I now start thinking about traps, right? We now start thinking about traps. So look left, right? Find some of those prior swings and see if we can, right? And see if we can get some of those traps. So we're not buying into that level of resistance. And if you have a chance tomorrow, right, not a bad idea to leave a portion of that position to run, right, up to that prior month close at 64.78. And then if we go a little bit higher, where's that? Yeah, see, there's that prior month high. That's that daily chart high I was talking about, right? 66.5. Yeah, it's a little bit unrealistic right now for tomorrow, but boy, who knows, right? Who knows? Look at how far the S&P's gone in the last few days, right? This could definitely get pretty aggressive here as well. If those sellers, right, who tried to call that top on oil, right? If those sellers are stuck in this trade, how much more are they going to let this thing go before they get out and this price just snaps back higher, right, to retest that high? So bottom line is we're definitely bullish, but how do we turn bearish, right? What's the plan for a bear market tomorrow? How do we turn bearish? You can see they almost turned bearish here this morning. First things first, strong move down. Second thing, pull back to the moving average, right? Third, strong move through. Okay, so you'll notice here today, right, strong move down, kind of strong, not that strong, right, but it couldn't hold the pullback to that moving average. That's the key to a good reversal. Strong move going against the trend, then pull back to the moving average. Now remember, at this point now, if those bears can't take control, we're going to go right back up again, and I'm going to be looking for a buy coming off of that failure, right? Because now you got a big wide open space, you're at support in the bull market, right? Easy to want to be a buyer there if those sellers fail. But if they can take control, then we look for that hidden channel. Okay, and these hidden channels are really important right now. We've got a couple of them watching in the S&P. We'll grab in a moment. Right, look for that sell off of some of these levels of resistance here. Right, try to get off that sell going back down again tomorrow. Okay, so we can be a bear here tomorrow, but the market has to turn bearish first. How do we turn bearish? Strength, pull back to the moving average, strength, follow through, right? Show that follow through. A strong move lower is not going to give us a bear market because you know what's going to happen, right? Majority of the time, those reversals, they strong move down, price pulls back, the bears can't do it. We get a buy into a pullback, and it's easy money, right, going back up, right, to retest that high. So keep that in mind for tomorrow. So now you get a plan if price goes up, if price goes down, if price goes sideways, or if price reverses for tomorrow. Now, speaking of up, and more up, boy, S&P finished the session on Friday with a big, low volume, end of the week run higher, and they didn't even look back in today's session. Again, most of this movement was in the afternoon. You'll notice if you look at this chart right now, we're really getting most of the easy trends right now, at least on the E-minis, right, in the afternoon session. So like I said earlier, keep your eyes and ears open in the afternoon. We're seeing some great trends. It's not usually that way, but you know what? I don't make the rules. All I do is see what we get every day and trade them. Now, this is a really good example. S&P is bullish. We're trying to reach this kind of target zone up here around 2790 after pushing through a measured move, right? I mean, they went to the measured move and didn't even blink. I mean, they bounced a little bit off, but didn't even pull back to the moving average, just kept on going. So we know they're looking for something more, right? The bulls definitely have control, and the aggressive sentiment right now tells me this is most likely a short covering rally as sellers try to exit positions before it gets too late. If we're going to go back to like a 60 or a 30-minute chart here on the S&P, I mean, you can see the writing on the wall, right? You can definitely tell. Again, I'm not going to call a retest of all-time highs right now, but you've got some significant space left here. Buyers now can smell it. And I think more importantly, I think sellers right now are starting to realize they might be on the wrong side of this market. And as the sellers start getting out, they don't wait to get out at support levels. They get out as the market's going higher. So that's why a market like this feels so stubborn, right, going higher, because it's not buyers. I mean, there are a little bit of buyers buying it. I'm sure there are, but the vast majority right now are sellers, right, who they had their stops parked here. They gave it a little bit of time to see if it would hold right there. Well, now that we're going above that high, I mean, if I was a seller, again, I wouldn't have taken myself out of it here because it's easy to be a head fake, but once it starts making that new high here, once we start breaking above that high, it's, again, I don't want to say it's game over yet for the sellers, but psychologically right now, right, the sellers have to be thinking, man, I shouldn't have gone against the trend overall, right? It never made that, right, that strength, pullback strength. It retested that bottom, but never kept going. So I think a lot of sellers right now, and this is not just the S&P, this is pretty much all the E-minis right now. I'm sure a lot of sellers are looking at this going, okay, I've got to make a big decision right now. Do I stick to my short, right, which we've already seen this market just blindly bullish for almost 10 years now, right? Or do I cover my short? Do I become a buyer and get in now before it's too late, right? Before I feel like a fool for missing this whole move back up to retest the high. That's all it's trying to do, right? The buyer's trying to retest the high, that big all-time high at 28.78.5. Okay, so that's, again, this is the big picture. This explains why we have, right, these afternoon runs right now. These are bears that are paying the piper. Right? These are bulls. You can tell it's mostly a short covering rally because they're not even pulling back to the moving average. That means the only buyers in the market are uber aggressive right now. It's most likely a short covering rally. There aren't going to be that many buyers buying that aggressively here until we can get some sort of shakeout from last Friday. So what's the plan here for it? Well, anytime I have this much strength, again, we went through the measured move and kept on going. I now know where our kind of objective is in the short term. Now remember, we go higher here. Where is it? Oh, there she is. There's the prior month close. But look at the distance, though. I mean, you can see. I mean, that's a mile away, right? So let's kind of come back down to planet Earth here right now, right? 28.36. I mean, I know this market's bullish, but that is a little bit crazy here for, dare I say this week? I mean, who the hell knows, right? These markets have a mind of their own recently. So, right, who knows? So as this market pushes higher, I don't want to chase it. Right? I don't want to chase and move higher. I realize it's very tempting to want to buy high here right now, but we will get an opportunity here, right, to buy at support, and you'll be rewarded for it. So as we go higher, we have some target zones waiting. We're definitely not within striking distance yet of that prior month close. And anytime I see a real strong move like this, really what I'm doing right now is I'm looking for a hidden channel. I'm taking that high, I'm marking up to this high, and I'm bringing it down here, just like we saw on oil, looking for a buy down off of that low. So basically, if this is as high as we go, then we know where we're looking for that buy, right, off of that rising support. But I'll tell you, if this thing keeps going higher, right, if we go higher here into the overnight, which is completely reasonable because all that bullishness, right, then all of a sudden I got to adjust. Right? I got to adjust this channel higher now, right? So you can say, for example here, right, if we were to, again, just example, if we were to go all the way to the top up around this, 2793 area, then I would tighten it up, right? So if we were to get up to that high, then we know we have, right, kind of a shallow or a steeper channel, right? We're looking for a shallower pullback. Right? The strength of this move will determine where that level of support is. So obviously I can't read minds, but I can tell you right now what I do know. What I do know is we're very strong to the bull side. We haven't seen a pullback, right, since about 10:30 this morning. Got real chopped up around that, right, that moving average. Beautiful example there of below it, failure, strength, pullback, and back up. How many times every week do we talk about that pattern, right? If you're a fan of the newsletter, right, you probably see that pattern in your sleep. Right, so definitely a good example there. That is a strong move down, but not holding it and going lower. It's a bull market still, right? On a fast time frame, it's a little more confusing, but on a slower time, though, it's pretty obvious, right? So with that, okay, I'm watching for support levels. I'm finding support. I'm finding beautiful, right, reversal line support there at 67.25. So we see a strong move up. I'd love to see a two-legged pullback. I'd love to see us pull back, trend line up, down, right? Let's go green. Let's go green. Trend line up, down, right? Failure comes over into strength into pullback, back up again, right? So again, you're buying that two-legged pullback, right? You're buying this failure above the moving average, and then failure leads to strength into pullback, right? Pullback going right back up again. Really, really easy there. Just get down around that low, right? Get down around that battle zone, buy at support. Okay, from there, right, if we keep going sideways, for example, let's say we go sideways here. Let's say tomorrow morning we come in, we're going sideways here. Right, double top, double bottoms, bull bias, right? So bull market into the range, one try, two try, who knows, right? Maybe we get a chance to use that trend line, right? Remember, anytime a market goes sideways, and my definition of sideways is if you see a double top here, and we're not making new higher highs, that will tell you this market is still bullish, right? It's just not seeing value in going higher. So what it really tells you is buyers are fed up with higher prices, and they're going to wait to buy low, right? So you want to look to buy low. How do we buy low? Two try rule. One try to break down, two tries to break down. Once the second try fails, then we're all over this, right? Trying to go lower. Same thing here, right? Strong move down, two try rule, failure, back up. It's the same basic principles. Okay, what if price keeps going higher? Yeah, I mean, again, if price keeps going higher, really not a lot changes. I just want to shift this channel a bit higher here, right? Failure, pull back back to retest the high, right? So think this is the same pattern, right? Same pattern as we saw earlier today, right? Same basic pattern, again, as it goes higher. As you can see, I'm not a big fan of chasing the market higher. I've been doing this long enough to know that, yeah, you can get lucky chasing the market higher, but it's difficult to get lucky every day. Every day, day in and day out, if you don't have the right fundamentals in your trading, fundamentals of your technical trading, I should specify that. If you don't have the right pieces of the puzzle, right? If you're buying high at all times, eventually you're going to have to pay the bill at the end of the day by being stopped out repeatedly and losing confidence in that. Once you lose confidence in it, it'll be a quick road down from there. So the bottom line is we get some great levels of support. We get a great strong trend here. Will it go higher? If it does, we'll adjust higher. If it pulls back, we get some great support levels waiting here on the pullback. Let's keep going. You guys are being patient with me here tonight. I'm blowing through all my corny trading jokes. Let's keep going here. About some Nasdaq. Nasdaq looks similar to the S&P, but it's a lot tamer, right? You'll notice the Nasdaq here doesn't look as aggressive. There are a couple things the Nasdaq doesn't have, or a couple things the S&P has, the Nasdaq doesn't. For example, right? The bulls have control, but we're still inches away from that measured move, right? Bulls have control. We're a little too close, right, to this level of resistance. So the plan will be to buy a two-legged pullback, right, down in support. If price keeps pushing higher, if it keeps pushing higher, courtesy of that short covering rally, then I start looking higher to that prior month high, right? We start looking for that big target overhead. So, again, there's a lot of things here that are different but very similar to the S&P. Remember, the S&P had blown right through its measured move, right? The Nasdaq still has the measured move to reach, right? The S&P was almost all the way up to its bull target, right? It was a very, very strong move, right? Where we were looking at a hidden channel on the S&P. This one is very well behaved. And there's one key component here that really stands out, and that's the midline. You can see the midline keeps holding. Now, when a midline holds like this, basically it's just telling you the buyers don't want to buy high anymore. They're going to keep trying to buy as low as possible. So the S&P and the Nasdaq are definitely the same direction. They're definitely very strong, but the S&P kind of has this kind of just blind bullishness to it right now. And again, probably because of that, right? Because of that short covering rally, right? Over on the Nasdaq here, right? You'll notice I go back to that slower time frame, right? The Nasdaq doesn't have as much room to breathe, right? Remember, the S&P was a good distance away from retesting those highs, right? The Nasdaq, if you go back to this, right? This is a 30-minute chart, not a 5-minute chart, right? If you go back to the long-term time frame, you can see we don't have as much room to explode higher, right, on the Nasdaq. So you can definitely tell there's a little shift in sentiment, right? The S&P has this sense of urgency to it right now. You can feel it, right? The Nasdaq does not have that. It's holding the midline. It's not blowing through the round number. It's not blowing through the measured move, right? So that's some key things to think about, right? Don't get too aggressive if you're in the Nasdaq. You can be more aggressive on the S&P because that feeling of missing out, right? Is what it feels like right now on the Emini S&P. So obviously here I'm drawing a bull channel, right? This bull channel still holds up right now, so no hidden channel yet, and so we know those buyers are trying to get to the top of that channel. At the same time, you get that measured move, right? The measured move will also be a major objective, right? Level of resistance. Then we have the big round number, right? 7,000, that's a big round number. It's a big deal, right? $7,000, right? 7,000, big round number. And then look what else we have here, prior month close. Right? But look above, though. There's your prior month high. That's why I said earlier, if we push through this, right, if we can push through this measured move, then we know where we're going, right? We're going to that bull target. We're going to that prior month high. And if we do push through the measured move, I would imagine we might have to go out there and find a hidden channel there too. It'll probably be similar to this channel that we already have, but we may have to go find those hidden channels, like we said, on the S&P. So Nasdaq is not nearly as blindly bullish. We don't have that feeling of, better get in now, right, before you miss out. And we have a lot of resistance up here, the round number, the measured move. Now, for all I know, tomorrow morning we could push right through this measured move. Well, the problem is we don't know that yet. We don't have that much information yet. The only information we do have is we know there's major resistance. And in most environments, again, I'm not saying this can't happen tomorrow, right? We could just blow right through that measured move and keep on going. But in most environments, when we get to a measured move, what do we get? A two-legged pullback. And so that's what I'm looking for here tomorrow, right? Two-legged pullback off the high, and then I want to be a buyer, right, for that. So that's basically the plan of attack. I got my reversal line there at 66 3/4. I got a little prior swing there at 7 and 7.25. I would rather not use that one though. I'd rather use this reversal line. Okay, so what we'll look for is, I know the measured move is there. I know that buyers in most situations are not going to want to buy into that measured move, so price will pull back. Maybe it's as simple as a trap low in the short term. Okay, before we get to that measured move, I will definitely be looking for a trap below that 77.25. But if we do finish off that measured move, then you want to be thinking profit taking first. Right, 1, 2 legs down, right, two-legged pullback into that moving average. Bears now try to reverse, bears fail, up above the moving average, right, pull back and retest, right. You're literally looking for, right, that failure and that pullback pattern to go back up and retest the high. You'll notice I'm not trying to pick a bottom, right. I'm not trying to be the one that buys the bottom of this pullback. Okay, don't get so worried about being the first one in on the pullback. There's plenty of time to get back in. Wait for it. Get above that moving average. Use the moving average as support, right? You can thank me later because it'll dramatically increase the odds of your success. Okay, now we oftentimes see a bull market like this as it goes into resistance. Sometimes it sits there and goes sideways, right? So sometimes it sits and goes sideways. If it goes sideways like this, okay, again, same thing we talked about on the oil and the S&P, 1 try, 2 try, and then back up in we go, right? So again, if we stop making higher highs and we start seeing some double tops up here, right, we know we're going sideways. Look for that dip below that low, look for the buyer from there. Okay, what if price goes higher here? If we continue going higher, my next plan is going to be get that moving average up and then look to buy using the measured move, using the low of that channel. That will be the goal here for tomorrow if this thing continues to just blindly push higher. And where will their objective be? Yeah, we have to assume they're trying to get up to that prior month high. They're trying to get up to that as we go into the end of the month, right? And again, as the writing starts to get pretty obvious, the writing on the wall right now for the sellers, right? We should start seeing this market, right, want to make a jump. All right, guys. So again, we are trying to get back to that prior month high, trying to get back to those all-time highs. A little bit, right? Not as urgent of a feeling on the Nasdaq, but a lot of that is because there isn't as much room, right, going back to those highs. Let's keep going now from the E-minis over now to the yellow metal gold, and we'll wrap up tonight on the euro. So gold is bearish with a triangle into a megaphone pattern, and a recent grind break going lower ultimately tells me to look for selling opportunities with a trap high up above the prior swings with a target waiting down at the lows tomorrow. That was a lot to swallow, right? But the bottom line is, here's what happened. At the end of the week last week, we finished the session in a very narrow, choppy, flat moving average, lower highs, higher lows range. Okay, now that range does have a bear bias to it, right? So this has been a bear market pretty much the entire month of February, right? Which, by the way, only has 28 days, right? We talked about that earlier. I'm having fun with you. So the bottom line is, right, we get some lower highs, higher lows, right, to finish up the week last week. Okay, that's a range. Now, what do we expect for a range? Breakout failures and back in, right? And that's exactly what happened today, right? So if you guys watch my newsletter, you know anytime we see a range, we expect 1 try, 2 tries, and failure back in. That's exactly what happened. Now you notice, right, a big, huge, strong run higher. I mean, that thing just took off in the overnight Asian into London, and the very beginning pieces of the U.S. session, by the time we got in this morning, those bulls had lost control and we're going back into that range. This is a really good example that it doesn't matter how strong this move higher is. If they can't hold that pullback, right, and explode higher here, right? If they can't give us strength, pullback, and then strength, right? If we can't get that strength at the end of that move, then this is all just one big great selling opportunity. Okay, so a really good example of not only a range breakout failure, but just what I always tell you, right? When it comes to a trend reversal or a breakout, right? Strength, pullback, strength. If you don't have that follow through on strength, right, this is nothing more. There's a great selling opportunity here for those bulls. Now, so now we have a bigger picture here, right? So now we got this triangle. Extend that out into the future, extend that out in the future. What happens a lot of times is these triangles, right, they end up kind of shifting forward into what I call a megaphone, right, or a bow tie pattern, right, if you're a little more formal, if you will, right, a little bow tie pattern there, right. That's how classy of a trader you are. The bottom line, though, is now we can use that trend line as resistance. I can use this trend line as support, right? And I can look for sells up, buys down, sells up, buys down, right? And trade back and forth around this channel, right? Around this range. Now, anytime we have a range, we want to stay away from the middle, right? So avoid the middle, buy low, and sell high, right? So stay the heck out of the middle, get up, one try, two try, back down in. Down, one try, two try, back up in. Okay, so that's the plan here for now. Okay, so stay away from the middle, because you can see, just look left, you'll see how choppy that was in the middle, right? Stay away from that middle, buy low, sell high. Now that we know the plan, okay, the word of the day is grind break, right? Grind break. We did one of these videos, was it last week or 2 weeks ago? Right? Grind break, right? The term grind break. If you're on YouTube right now, just look back in time and you'll see that grind break lesson. I want to say we did it last week or the week before that, right? You can also search for it, right? That grind break. The bottom line, though, is we have a very strong move down off the high, right? Well, when we have a very strong move, what usually happens? We usually see a two-legged pullback and a retest. Well, what didn't happen? Yeah, we didn't get the second leg, right? There was no second leg. So why do we look for a second leg? Because that allows us to sell high, right? That's why a second leg, that's why a two-legged pullback is so reliable, right? Because it allows you now to sell at a higher price. And when you can incorporate it with a level of resistance, right, something like a trend line or something, it really becomes a powerful area. So the moral of the story is right now we have what I call a grind break, and that means it breaks free of the channel and grinds lower. It never pulls back. So that area now above 36.5, yeah, that's my hot spot. One try, two try, back down in. It incorporates the grind break. It incorporates the measured move acting as resistance. It incorporates the top of the megaphone, the top of the triangle acting as resistance. Okay, it also allows us to catch buyers on the wrong side of the market, right? If we jump higher here right now, buyers will likely get confused by the strength going higher. They'll think it's a bull market. They'll try to buy the pullback, and I'll be waiting there to sell them their failure, right? So that's the idea as the market goes higher here, right? If we go sideways here at this low, if we go sideways right in the middle, right? If we pull another one of these, right, shenanigans from Friday, right, where we do nothing the entire session, right? If we go sideways, two try rule, right? One try, two try, back down in. The objective now is to get back down to these opposite edges, right? Down to these opposite edges of the range, right? So one option, up, two try, back down in. Second option, right? We go sideways here in the middle. One try, two try, back down in again. What if we go lower here, right? If we go lower, I'm going to start looking at this as a spike in channel, right? So if we do make another leg lower, I'm going to start looking at this as a spike in channel. In that case, find those swings. You know the rule for a spike in channel, right? If you watch my newsletter every evening, we talk about spike in channels all the time, right? Trap high and back down we go from there. Okay, the only other scenario we have now is how do we break out? How do we reverse? How do we turn bullish? Strength, pullback, strength, right? Just do what the buyers weren't able to accomplish earlier this morning. Okay, and if you're wondering what to be hunting for, well, there's that prior month close, right? There's your prior month level. So it's relatively easy there. Again, we just got to get that breakout, get that strong breakout. But if they can't hold the pullback, though, whoopsie-daisy, we're going back into that range again, all right? Now, if we end up ourselves down to that low, one try, two try, get that moving average over, buying off that low, easy, right? Easy. 2-try rule, get back above the moving average, buy that pullback, boing, back into that range again. Okay, so don't buy high, don't sell low, stay away from that middle, right? Buy low, sell high, use those 2 tries, right? 1 try, 2 try, right? And again, try to stay away from that middle and watch that grind break, right, on the yellow metal. All right, let's keep going. How about some euro? Wrapping up tonight with the yawner of the newsletter, right? I'm glad this is the last chart of tonight's session because there ain't nothing interesting happening right now on this euro. Now, I don't want to talk too much trash because I do love this market. I love the euro. I don't like the fact that it makes me think too much with all of its 0.00005 calculations, but I still do love the fact that it's got a nice pure correlation to the dollar. I love the fact that it, for the most part, it moves really well. It's great for a new trader at $6.25 per tick. But right now, we are sideways. So what's the plan here for tomorrow? Well, there's a bear bias, as you can see, right? There's a bear bias. That's pretty obvious, right? So we definitely want to be a seller. How do we sell in a range? We stay away from the middle, right? We sell high. How? 2 tries, right? 1 try, 2 try, back down in, right? Let them try once, let them try twice, and then we'll try to dump this sucker back down into that range, right? If we go lower, right? If we go lower, I don't want to say you can't do this going lower, but just be aware though, right? I would rather have you wait for that moving average, get back above the moving average just to give yourself a little bit more of an edge than trying to buy low. Because again, it's a bear market, right? It's a bear market. Now, if you're wondering where you can find some support down there, check out a measured move, right? Support level there. If you're going to be a buyer in this market, you really want to try to incorporate some of those support levels here. What if we took this high and projected down to that low? Hey, there we go, right? 1 try, 2 try. That will be an interesting area to be a buyer as well. Again, though, anytime you're going against the directional bias of the market, like I always recommend here, go half size. If you normally trade with 2 contracts, go 1 contract. If you do a 10 lot, go to a 3 or a 4 lot when you're counter to that bias, because the odds aren't going to be as good. And, get yourself back above that moving average. That way you can get the best bang for the buck. So right now in the euro, stay the heck out of the middle, buy low, sell high, right? The bias is definitely to the upside, to the downside right now. So use that 2-try rule and you will come out on top. So range bound on euro and gold. Gold looks quite interesting there with that grind break. Again, Nasdaq, right? Nasdaq not as urgent as the S&P, but very, very bullish. Looking for a 2-legged pullback on both the S&P and the Nasdaq. And then again, right, looking at oil here right now, they're kind of getting stuck in that middle. Look at that deep pullback back down, or right, I'll let them finish the move and then look for that trap, look for that buy off the low here for tomorrow. Speaking of tomorrow, what are you waiting for, right? Why are you battling through this on your own? Come out and join me as a brand new advanced member. Again, if you're on YouTube, there are links in the description of the YouTube video. Our advanced classes are more popular than I've ever seen them in my entire 10 years and over 500 weeks of teaching and trading, right? I am so excited for our clients and our students every day. I continue to see new traders coming in every day. They learn the strategy, they put their time in, right, and they're seeing fantastic results. I hope to see you there with me tomorrow as well in the advanced classes here. But don't forget, we got a place for everybody, beginner, intermediate, advanced. I get a great free trial on the homepage. Again, if you're on YouTube right now, check the description for all the links. And if you have any questions, don't forget, post them on YouTube in the comment section or hit me up on live support. I'm always here to answer all your questions. Yeah, I'm the guy in the background in that picture here. I'm the one that picks the phone up. All right, guys, so hit me up on live support. Drop me some comments below the video. Keep in touch, and we'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, we'll do it again tomorrow night, right? Does that sound like a deal? 8 o'clock Eastern time tomorrow. If I don't see you guys at 8 o'clock in the trade room tomorrow morning, my name is Joseph. As always, be well out there. Be nice to each other. Be here next time. Adios, amigos. Bye-bye for now.